event on the topic of ESG and green finance. I'm Remus Daniel, and I'm the Investor Relations Officer at the Bucharest Stock Exchange. The goal of today's event is to have an introduction on broader green finance topics from different angles, and also to give you some insights on our plans and goals in the next couple of years. As we all know, in the last years, Europe has been a flag bearer for green finance and also for implementation of ESG standards, as well as for the broader fight against climate change. So moving on, we will start with our first speaker, Mr. Tilman Leuder from the European Commission, the head of securities markets. Thank you very much for joining us this morning, and the microphone is yours.
Thank you very much. Good morning to everybody. Am I sufficiently audible? Is everything fine? Okay. Thank you very much. So my name is Tilman Leuder. I am at the European Commission in the department which we call FISMA, so that is Financial Services. And within that department, I'm responsible for the division that deals with securities markets. And securities markets is a wide topic. We deal with stock exchanges, with issuers. We deal with the prospectus, the admissions prospectus, the public offer prospectus. We deal with bonds. We deal with market infrastructure and transparency. And we deal with all kinds of other issues around that. Notably also, I think very importantly for this conference, we also deal with financial indices and benchmarks. So what I'm doing and what primarily, of course, my team is doing sounds extremely technical and sounds extremely finance oriented, but you will quickly discover that most of these issues that we are dealing with have a sort of sustainability angle to them, and have a very clear angle also with sustainability ratings, sustainable investment, which is the topic of your conference today. So first of all, of course, I have to thank you very much for having me at this conference. It's an important event which kicks off the efforts of a stock exchange to have a sustainability policy, to have sustainability analytics on its issuers. And I think that very much goes hand in hand with what we are trying to achieve at the European level when we talk about sustainable investments. So I think it's very appropriate that this opening here is delivered by somebody who actually deals with stock exchanges and issuers and indices, because we at the European Commission, we're beyond just the general goals of sustainability. I think those have been defined, and we all know that the European Union has promised to become carbon neutral by 2050, and that we have a sustainable finance action plan, that we have concrete carbon reduction targets, that we have the so-called Green Deal, which is 1 trillion of sustainable investment projects. That's all very well known, and that's the big picture. But I'm not going to talk about the big picture today. I'm going to talk about the concrete actions that we're taking to put this big picture, these overall goals, into practical application. And I think from the program, I also see that this conference is going to talk about the practicalities. It's going to talk about how do we actually get to our Green Deal? How do we get to be the first carbon neutral jurisdiction in the world? And that just means that a lot of concrete work and a lot of concrete actions on the ground have to be taken. And I think it is very, very interesting and very, very encouraging that the Bucharest Stock Exchange has such a program and has partnered with a private organization trying to rate the issuances on the exchange as to their sustainability. Now, we have some experience in creating indices and benchmarks. You may remember that we have introduced a climate transition benchmark in my division. So that was a project which we were in the lead on. And that project showed that it's often very, very challenging to go from the goals, which in that case was carbon reduction, to the implementation, which was to actually have a methodology to show that a company is over time reducing its carbon footprint. And once you get into the details of this, you will see that it's very, very challenging to see what kind of methodology, what kind of metrics you're actually going to use to say that this company, this particular issuer, is on a sustainable carbon footprint trajectory. So there's the theory that the issuer should be screened, and you can have positive screening, you can have negative screening. That's, if I may say so, the easy part. The more difficult part is then, what are the metrics on how to screen these companies? What are the parameters that you look at? Carbon footprint, carbon trajectory, just to name a few. Level one, level 2, level 3 type of pollution. That is all. The devil is in the detail on these kind of things. So let me just tell you what we are currently going to do at my level in recognition of the sustainability agenda. And I think that we have 5 projects which are currently pending. So one of them is completed. It is now being put into action. That is the EU climate change benchmarks, or the EU Paris aligned benchmarks, which is essentially all about the metrics that you use to see that a company is on a carbon reduction trajectory over time. So this is not just a snapshot of what the company is currently doing, but we are trying to identify also companies who currently have a high carbon footprint, but are on a trajectory to a much lower carbon footprint, because that shows actually that investing in these companies is going to reduce the carbon footprint, because they go from a very high carbon footprint to a commensurately lower carbon footprint. So if you invest in such a company, you're actually going to achieve something. If you're just going to invest in a company which has no carbon footprint, you're not actually going to achieve a reduction. You're just stabilizing the carbon emissions, because that company is already a non-emitter, and you will just stabilize the situation, but you're not actually going to improve the situation. But there's a lot of thought that has to be given when you define the metrics on how to rate sustainability. And in our concrete example, it was a sort of subcategory of sustainability. We had to find the metrics on how to measure a sustainable reduction of a carbon footprint of a higher polluter, that you put him into a lower polluter category. So very, very challenging. It's not the theory which is the problem, it's how to put it into practice. So that's project number 1, the climate change benchmarks. Then we have another project in the securities markets, which essentially says that you have to have sustainability disclosures across all the investment products which are sold to the investors at the retail level. And that, of course, requires that you have objective metrics, again, for what we call sustainability, or what you also often hear as environmental, social, and governance. Again, you can't just claim that you are doing these things. You can't just claim that what you do is good for biodiversity, or you can't just claim that on the social front that you have fair labor standards, or on governance that you have fair policies on remuneration, for example. You actually have to have the metrics to prove that there is some substance behind these affirmations. And that is what the metrics, and that is what we're going to discuss at this conference, is all about. Then project number 3, you have the suitability assessment. So all financial products, and that would include shares and bonds and green bonds, and also fund projects, units and shares in funds. Before they are sold to retail, they have to be assessed whether they are suitable for this particular retail client. And as part of that suitability assessment, we have built in a stage after you have looked at the client's personal circumstances and the investment horizon of that client. and the investment goals and the liquidity needs and the legal and the tax situation. So that you still have to check. But then when you have checked sort of the profile of your investor and the risk and return appetite of that investor, then you have to screen at the end and say, we have a range of sustainable products to satisfy those investment goals. And you have to then present to the investor the range of sustainable products that could be a default option. We call that the sustainable product default. And that's very important, because if these products then have a sustainability rating or a sustainability label, which is backed up by some serious analytics, the investment advisor at the point of sale can then actually say, you client can achieve your investment goals by investing in this range of products in a sustainable manner. So you can achieve exactly what you want to achieve, but I can give you a default option that you can now achieve this with sustainable products and in a sustainable manner. So that is a very important point actually at the point of sale, that there is this suitability assessment with a sustainable option, which is now built into the point of sale advisory conversation. And then we have, of course, something which goes much more deep and concrete, which is in the area of fixed income. We are developing a green bond standard. And a green bond standard, of course, is a bond disclosure where the proceeds of the money that you raise with a green bond will go into a project. And again, to identify whether a project is sustainable or not, you have to have reliable and trusted ratings. You can't just claim that this is a green project. You need to prove that this is a green project, and you need to have a sort of objective yardstick, an objective benchmark for that. So the green bond standard or a green bond prospectus will only work if, again, you have an objectively verifiable rating where the affirmation that this is a green project is borne out by real data. And finally, we have the eco label for retail finance products, which again is based on some objective rating which is necessary. So for all of this, and this is possibly where I want to conclude and also maybe take a few questions, for all of this, we need sustainable ratings. And that is why my team, so that we are not the core environmental team, we're actually the securities markets team, but that is also why my team has launched a study on ESG scoring, ESG indicators, ESG factors, or ESG research. So we group that together as ESG assessment tools, or maybe to be even more sort of popular in my choice of words, it's basically an ESG rating tool. Because you see that for all these projects which I mentioned, we rely on the existence of an objective rating. There is no sort of subjective rating in this area. It is not that you say that it's sustainable and that you feel that this is sustainable, that this actually becomes sustainable. There must be an objective rating which proves with empirical data, just as in my example with the climate change benchmark, that you are sustainable. Just as with the climate change benchmarks, we had ratings and analytics to show that there is actually a trajectory which reduces the carbon footprint. So we've had this study now, and we hope that the study will be available by the end of the year. And that study will give a broad inventory of the actors that are doing such ratings, the different methodologies, the different strategies, the different ESG assets under management. And that gives us a picture, a snapshot on what ESG rating in the European Union looks like. And on that basis, we might then decide on a series of policies on making those ESG ratings more reliable, more trustworthy, so that indeed, when you have an ESG label of any of the sort that I mentioned, whether it's a green bond, whether it's a sustainability product, whether it's an ESG product, that there is an empirical backing for any claims of a positive environmental impact. So this is much bigger than just climate change and the carbon reduction trajectory that we looked at in the climate change benchmarks. This is any other form of positive environmental impact, which makes us carbon neutral by the end of 2050. So I want to stop here to have maybe the opportunity for a couple of questions on the variety of these projects, just to say that what I wanted to prove with this opening statement is that sustainability at the European level is no longer just a sort of policy goal, and is no longer just a subject matter of policy documentations and action plans. It is actually filtering into the very concrete work that we are doing in different fields, such as securities markets, such as the regulation of stock exchanges, such as the regulation of indices, which are used as benchmarks for the performance of asset managers. And it is becoming really part of our daily work. We are integrating sustainability aspects into the daily advisory work, also on the sort of final link to the end investor, so the point of sale. So it's really part of all of the policies that we are doing, and it's an integral part of all of the securities market legislation and investor protection legislation that will be coming out of the European Union in the foreseeable future. Thank you very much.
Thank you very much as well. Yes, and it's indeed very, very interesting to hear about the broad range of, let's say, projects you are working on at the European Commission level. Maybe just one question from my side. You mentioned at the beginning the Green Deal, and the information we kept seeing in the media is that the EU is planning to finance part of the recovery package, the post-COVID package, by issuing green bonds or social bonds. My question is, do you see this as an incentive and maybe as an opportunity as well for the member states and for the corporates from the member states to move towards this type of investment products? Saying this because, let's say in Romania, it's still very early days. Basically, we don't have green bond issuers. We don't have, let's say, alternative green financing securities in the market. And we are trying to figure out the potential and if this can be linked a bit by the EU initiatives.
Yes, well, the initiative is obviously destined or designed rather to be a flagship, to set some sort of an example. The issue that we have with green bonds is twofold. You need to have an objective standard on what is green, and I think we discussed that. And then the second thing, which is actually more important, you need to actually have green projects to invest in. Because you can have a wonderful green bond standard and you can have all the accompanying methodology on what green is, but you then also on the ground, and this is where the member states come in, you then actually have to have these projects. Because if a green bond standard exists, but there are not enough green projects out there, then we have the situation that maybe we cannot invest. I think what the goal was, 30% of the investments we do should be in a green project. So what we're trying to do here is to create a market for green projects. And we are trying to say, look, if you have this investment flow is channeled to the green projects. You better then, if you want to be on the receiving end of this investment flow, you better actually start having green projects. Because the biggest issue we see, apart from the methodological issues, which you're going to discuss today at your conference, is that there are actually not enough green projects on the ground. It's very easy to have lots of infrastructure projects and lots of projects in the health sector. But the issue is, where is the green project? And if we set a target, 30% has to be in green projects, that's a clear signal that if you want to have this investment flow and if you want to be the recipient, you better need to also start to do the COVID recovery in a sustainable manner, i.e., as part of that recovery program, you better start having green projects so that whatever we use as recovery money is invested in a sustainable way and contributes to the twin goal of COVID recovery, carbon reduction, and carbon neutrality by 2050.
Thank you very much. That was quite a comprehensive answer, and I think it really clarified the topic. Yeah, I think this is all for now. Thank you very much for your participation this morning, and yeah, hopefully we will have you as a speaker at future events as well, and we will maybe be more involved in collaborating with the EU institutions on green finance topics.
Thank you very much for having me, and I wish you a very successful conference. Thanks so much.
Our next speaker is Mr. Adrian Tănase, the CEO of Bucharest Stock Exchange, to give us a little insight into especially our plans and the latest developments in Romania.
Good morning. Thank you very much, Remus. Yes, I will speak a little bit about our initiative, which is practically announced today with collaboration with Sustainalytics in this field of sustainability of our companies. I have some slides as well. I will share with you if I am. Okay, so hopefully you could see them. Okay, so why you have initiated ESG project? Because you have observed, yes, within the investors community that the focus is of the investors is shifting from the shareholdership, which is looking, let's say, theoretically only on growth and profits exclusively, to the stakeholdership, yeah, which are looking into a broader sense to the companies. So they are looking not only to the growth ratios and the profits ratios, but also to the sustainability of those profits created by the respective companies. And the sustainability having embedded all these letters: E, environmental, E, social, and C, corporate governance. Yeah. That's why you have initiated those ESG scores, yeah? Because you are thinking that it's becoming more and more important within the investors community. I want to show in the next slide what currently the Romanian stock, the Romanian companies are looking in terms of valuation, comparing with the regional stock exchanges. You see that comparing with these regional peers, we are trading both in terms of PE ratio and in terms of dividend yield ratios with discounts. So the dividend yield ratios for Romanian companies are around 5%. Yeah, it's the higher in the region, and the PE ratio it's 9.72. So yes, it's an average of 20% discount comparing with the regional indicators. Yes, of course, we have a lot of things to do to close this gap in terms of valuation, and one of our main priorities to, of course, to increase the investor interest, yeah, because higher the interest is, lower the discount is, and yes, for this you are addressing different directions. So you want to improve the market classifications, and you have realized this recently because the Bucharest Stock Exchange has been reclassified as a secondary emerging market by FTSE Russell. So we are on the good path on this direction. We want another priority for our market is to increase the domestic investors base. So you have projects to increase significantly the retail participation into the capital market. So the Romanian inhabitants are voluntary. The voluntary participation of Romanian population is very low, and we want to change this significantly. We want to have a friendly environment for the investors. We want to bring new products and services into the market, and here I want to mention the clearinghouse project we have initiated also this year, and hopefully we'll have in place in 2022. And the last but not least is this dimension to enhance the communication and reporting of of the Romanian companies. And within this initiative, you have launched this this ESG project together with Sustainalytics. Of course, you have other initiatives in this communication field, and I want to mention here the ARIR organization. You have supported, and they are doing a great job into this direction. Of course, within the communication field, the non-financial reporting is becoming more and more important. Currently, more than 2,000 institutional investors managing more than $80 billion employ ESG factors in their analysis. Creating and improving the existing sustainability policy and increasing the non-financial disclosures is a key for the local issuers because they will have a better investor reach. They will access the new long-term sources of financing, and they will improve the long-term potential reducing risks. All this let's say policies and which should be implemented within the targeted companies will be a step towards closing the valuation gap, as I said. I will refer a little bit about our project we are announcing today. So the first step is to assess the current ESG status of the local issuers, and to address this step, you have initiated this collaboration with Sustainalytics, global recognized rating agency, let's say, with a very good standards, and that I have chosen them, and because we have to have some globally recognized standards within our scores. The second step is we want to build an ecosystem to support issuers to improve their ESG scores. So you have to, after the scores will be available, you have to help the companies, the local companies, to improve them. So we have to offer them some guidance in this direction. And here the collaboration, let's say, with the BRD, Sustainalytics, the IR Association, Romanian IR Association, and other stakeholders, some of them being presented into today's conference, is very important. So the final goal being to provide a guideline in terms of reporting and the ESG education towards the Romanian companies. And step two, this stage one has been launched, as I said, and stage two, which we are targeting to be launched in 2021-2022, is to create certain things for our certain financing opportunities for our companies. This is the final goal, and yes, as an example here, it's to develop a green bond segment within the Bucharest Stock Exchange, and also to develop some products based on ESG scores, like ESG weighted indices. In terms of risk of opportunities, let's say Romania has a very specific need on this sustainability project, because 61% of our market is related to high energy intensive sectors. So 61% of our BET index has a high exposure to energy, which is a sector with a very high investment demand, like 22 billion estimated investment needs until 2030. And we think that to lower the financing cost for this investment needs, all these companies within this sector, but not only, should have a sustainable strategy, improve communication. Yes, of course, we have started today this ESG project, and with the final goal to help our local companies to minimize their financing costs for their investment projects. So this was my presentation and my intervention into this conference, and yes, I'm more than happy to answer some questions.
Yes, thank you very much, Adrian. Maybe one question, because we know that some of our issuers already did a lot of work, and they developed their sustainability policies in the last couple of years, while on the other hand, some issuers are in the early stages. What would be your advice for our issuers and partners?
It's very important for our issuers to understand that this is a long-term project. The most important thing is for them is to understand the relevant risk and reporting gaps, and they should have the willingness to address them in a meaningful and to communicate with their investors and other shareholders. You don't want only to tick a box about the ESG scores, but we want to bring value both for our investors and for our companies into the Romanian capital market. Of course, there are many companies, valuable companies listed on the Bucharest Stock Exchange. There are some companies which are already doing a lot of efforts in this sustainability field, let's say. And but all of our companies should understand that you have initiated today a long-term project, and they should adapt, they should understand, and they should adapt to these new economic realities which we are experiencing these days. I don't hear you.
Thank you very much for your intervention, and thank you very much for the advice. That hopefully it's very sensible, and hopefully it reached our issuer companies. We'll proceed with our speakers from Sustainalytics, our partner in the initial stage of the project, and the provider of the ESG research and ESG ratings for the Romanian companies. And we will start with Ms. Cătălina Secretanu, Executive Director for Client Relations. Cătălina, the microphone is yours.
Hi, good morning. Thank you for the invitation. Firstly, it gives me great pleasure to speak at this event. First of all, because I'm Romanian as well, and have been working for Sustainalytics for the past 8 years, based in our London office. And whilst Sustainalytics has an office in Romania dedicated to conducting research, we're primarily working with international parties as it pertains to our services. So certainly, it's great to be able to kickstart our client footprint in Romania with the relationship with the Bucharest Stock Exchange. I will spend the next 10 minutes or so by talking a bit about the broader picture as it pertains to trends in ESG and responsible investment at a European level, and what we see the drivers for ESG at an investor level, which I think will be interesting for the issuers that are following the conference today, as hopefully it will give them a bit of a flavor on what are some of the requirements as it pertains to investors and ESG. So I do have a presentation prepared, so let me just share my screen. Bear with me. I am not very familiar with Zoom. We use Microsoft Teams at Sustainalytics, but let me do this quickly. Good. I assume you can see my slides now.
Yeah, it's all good.
Great, thank you. So perhaps I'll start with a short introduction to Sustainalytics for those of us that are not familiar with our services. So Sustainalytics is a dedicated environmental, social, and corporate governance research firm providing services to investors and corporates and really supporting their development and implementation of their ESG strategies. So really, in a nutshell, our services are almost exclusively focused on conducting research on how well companies are managing their environmental, social, and corporate governance performance and providing these insights to investor clients globally. We are one of the largest firms in the space with currently over 700 members of staff and actually 2 offices in Romania, in București and Timișoara, and with over 700 clients globally. We have been operating in the space for over 25 years now, and originally Sustainalytics has been headquartered in Amsterdam. So as a company, we have a very strong European footprint, and without a doubt, if I am to reflect on our client, investor client base globally, it's primarily or historically primarily driven by investors in Europe and has over the last 7 years or so grown in other parts of the world, like in North America and Asia Pacific. And in terms of our own ownership, we are owned by a company called Morningstar that I'm sure many of you will be familiar with, a large financial services firm. Now, focusing a bit on the trends that we see in ESG, first of all, it won't come as a surprise to you that over the last few years, we have seen an increasing growth in signatories to the principles for responsible investment. Really, the slide here captures a bit the momentum that we have seen globally, driven very much by asset owners and asset managers. Another interesting example that has really driven further the growth of the market is, I would say, the acknowledgement that looking or assessing environmental, social, and corporate governance factors is also financially material. And on this slide, you can see 2 examples of high-profile corporate scandals, one related to WeWork and the other related to Volkswagen, both having quite some substantial either environmental failures or corporate governance failures, being 2 of the examples that investors refer to in acknowledgement that the way in which a company is managing exposure to environmental, social, and corporate governance risks is an indicator of how they are managing risk, perhaps holistically as a company. Now, if we move to some of the drivers that we see in the market for ESG and sustainability, and I think these are very important to be mindful of. So on the left-hand side, you can see some of the main drivers that we identify for investors to look at these types of issues, ranging from regulatory to reputational to enhancing investment performance through ESG, and certainly within some large organizations, primarily large global asset managers, all of these drivers will exist. However, for some, I think it's important to note that different organizations will have different drivers for looking at ESG. And just to give you some examples, what we see in the retail and wealth space is that those types of parties are very much focused on understanding what is the impact that they can make through their savings and investment, and then being purposeful in the choice of the companies or the choice of the funds that they are investing in to provide alongside a financial impact, also be very purposeful around environmental and social outcomes. Whereas if we're looking for a large asset manager, they will be looking on the one hand to be able to meet client demand, which is one of the key drivers around ESG, but also ensure that in integrating these types of factors within their investment process, they're also really able to enhance their investment performance, and I would say contribute to their secret sauce around ESG. And certainly large global asset managers are increasingly interested to be able to have, I would say, a unique take on how they look at integrating these types of insights as part of their own processes. Now, regulation, especially regulation in Europe, as we have also heard from one of the earlier speakers from the European Commission, has significantly created a lot of, I would say, demand and appetite in the market. And without going into the detail of the regulation, I think it's useful to mention is that ultimately the regulation around ESG that we see in Europe points to three objectives. So the first one is around growing sustainable finance. So regulators are encouraging companies and investors to launch to market products that have a clear environmental and social outcome alongside financial performance. And this is where you've seen the growth of green and social bonds encouraged by regulators and also by other organizations. Effective stewardship. So here the focus has been for investors to engage with their underlying investee companies to ensure that the investee companies are managing well exposure to systemic issues, whether it is to issues like climate change, whether it is on issues like the future of work, especially in the context of the pandemic. If they are if they have operations in frontier or emerging markets, ensure that their workforce is played equitably. So there's a lot of focus on ultimately investors really making sure that their companies are managing well exposure to key ESG issues. And the third piece is focus on disclosure and transparency of ESG approaches. So if you refer back to the slide that I mentioned earlier, where I spoke about the key drivers for ESG and being mindful that over the years, asset managers have really built their own approach to ESG. Now, part of the regulation is saying, we would like you to disclose more around how are you making investment decisions that are impacted by ESG factors? If you are launching a green or climate change oriented fund in the market, what are the substantial positive environmental contribution that the companies that you are investing in making? So a lot of focus here. Now, why I think it's important to note these regulatory trends, especially on a conference like today, is because ultimately this means that investors will require their investee companies, and I'm sure in the context of the Bucharest Stock Exchange, some of these companies are listed here, will require to disclose a lot more around how they manage ESG risk. And certainly what I can say from a Sustainalytics perspective is that we work with a lot of investors who have exposure to emerging markets and emerging stock exchanges. And as such, some of our investor clients may ask more questions around ESG disclosure than ever before. Without going too much into detail, ultimately the type of insights that we are providing to the market, and I think it's useful to be able to note these because ultimately they come back to what I'd say, what are the objectives that investors are aiming to achieve when looking at ESG research, falls into these three buckets. So the first one is ESG risk. So ultimately, as I mentioned earlier, the approach here would be to understand what is a company's exposure to environmental, social, and corporate governance risk, and how well does a company manage that risk. The second dimension there is values alignment. So ultimately ensuring that investors' values are aligned with the companies that they are investing in. And this is an approach that many pension funds, for example, take in ensuring that their members or their beneficiaries' values align with their investment. So, for example, ensuring that the companies that they're investing in are not involved in child labor or significant environmental controversies, or are not investing in any companies that are producing weapons, and certainly in some countries not investing in any companies that are producing tobacco. So ultimately there the objective is to focus on that values alignment piece. The third pillar is around investors aiming to achieve really concrete environmental and social impact outcomes. So ensuring that the company that you are investing in, apart from managing exposure to ESG risk well, is producing a product or a service that has a clear positive environmental and social impact. So a good example of that would be a car manufacturer that is launching a green fleet, or it could be an energy company that is diversifying its product and services away from only fossil fuel to also focus on green energy. And there is a lot of appetite from investors to be able to identify those companies that, apart from running, of course, a profitable company from a financial perspective, also are achieving certain environmental and social outcomes through their activities. And I'd like to perhaps wrap up my short presentation today by recapping some of the objectives of the partnership between Sustainalytics and the Bucharest Stock Exchange that we're really delighted about. So really wanted to be able to speak about three dimensions. So first is around the objective. I think Mr. Adrian Tănase mentioned that earlier in his presentation as well, around the objective to promote responsible investment and really highlight the importance of ESG standards among the companies listed on the Bucharest Stock Exchange. In support of that, Sustainalytics will be providing top-line ESG research and ratings for most of the companies listed on the Bucharest Stock Exchange. The ratings will be available to the exchange, and then really enabling companies to review and raise awareness on the insights that they aim to provide to underlying investors. And I think you would have heard earlier in the in today's conference also, there will be a lot of guidance and also providing insights on our insights and why we're looking at certain indicators as part of our research. And as we look at the future, of course, rated companies can license the use of these ESG risk ratings for a variety of different purposes. And I've listed here some, including investor relations communications, raising capital as part of ESG sustainability linked transactions, and other types of projects. And I think with that, I will hand over to my colleague, JC Berthelot, who will go into a bit more detail around what we see in the green and social sustainability space. I'm happy to take any questions now or at the end after we conclude the ESG presentation. Thank you.
Yeah, thank you, Catalina. So I'll try sharing on my side, so it stops your session. Yes, that's fine. Okay, thank you. So thanks a lot, Catalina. So I think Catalina provided a lot of insight, I would say, at helicopter view, right? Kind of a general approach of the markets and trends in ESG. So my name is Jean-Claude Berthelot. I'm based in Brussels, director at Sustainalytics in the SFS business unit. So this is the Sustainable Finance Solutions team, a newly set up team in 2018, and we look at the requirements or demand from corporates, where the rest of the company focuses on investors. So today I wanted to maybe provide a bit of a deeper dive into what we're actually providing here to the Romanian issuers through the partnership with BVB. Explain some of the sustainable products that we see corporates in other regions are bringing to market, which potentially we expect more Romanian issuers to follow that route soon. And then, as mentioned by Catalina, we're happy to take questions at the end. So the novelty is that now for about, I believe it's 70 Romanian issuers, we have created the initial ratings for 70 of them. So these are available. I believe Remus and his team sent a communication to the corporates so they can ask for a copy of their report. So this is, of course, a transparent process. So do not hesitate to reach out for a copy of your own report. And let's say from the broader perspective, I wanted to focus a bit more on, a bit more specifics, right? What it is that we actually bringing to those corporates. How is our methodology working? So it's called the ESG risk rating. It was launched in 2018. It's our flagship rating product, the one really that our 700 or so institutional investors are leveraging as part of data they purchase from us. So basically, and let me take this away, otherwise I don't see my screen. Basically the approach of the risk rating methodology is that really tries to make a measurement of the unmanaged non-financial risk that a company basically has. It's very different by industries. So with this rating, you can compare, and this is quite unique, I would say, in this space, ratings between companies in different sectors, right? A bank compared to a pharmaceutical or an oil and gas or a mining company. So it's comparable, but of course, industries don't start from the same starting point, right? Some industries, some sectors are more exposed by nature to ESG risk, and I guess that won't come to a surprise to anybody. So within an industry, important to look at the relative performance, I would say, of a company, because the raw risk rating score as such, let's say, provides a measure of risk, but you have to remember that the starting point of exposure is not the same. So it's a two-dimensional approach. One dimension is the starting exposure, and then the second dimension is the management score, kind of how well or how good the management of the company puts in place policies, procedures, implements, let's say, risk mitigations measures to basically reduce this ESG risk exposures. And yeah, so last point, so we have 5 risk categories from low, from negligible to severe. I think the next slide, because I don't want to get too much into the detail of the methodology, but it's still important to make it clear what will be what we have done here, what will be available for Romanian issuers. If you understand this slide, basically you understand our risk rating model. So as mentioned, so the dark orange bar is the starting exposure, which is a lot driven by industry, and that's the initial exposure. From this risk, we then look how much of it is manageable, and this is broken down by different let's say subcategories, right, that we call material ESG issues. So it can be, so corporate governance is always one of them, and then you can have between 3 and 10 material issues per sector. So I don't know, community relations, carbon on operations, so all of different material issues. And all of them have the same kind of approach, total exposure, and then from that risk, how much is manageable by nature, and how much is unmanageable by nature. For example, community relations, we believe 80% of such a risk is manageable. So it means 20% is unmanageable, right? So the company has no leverage on it. It will appear on its risk rating score at the end. So basically where the companies have an impact on the outcome of the rating is on the darker green section, right? From the risk which is manageable, how much of it is actually really managed, and that is measured by the management score. So if imagine the manageable risk was a measure of 10 points, if the company had a management score of 100, it means it would manage 10 of this 10 points. Of course, this never happens. So imagine they have a management score of 70, it means they manage 7 points out of those 10 managed, and basically then the management gap in my specific example would be 3 points, to which you add the unmanageable risk. Don't know if my mouse will show. And basically the end result is at the bottom, the unmanaged risk, which is the sum of the unmanageable risk by nature and the management gap, the risk which was manageable but which is left unmanaged. So this is really what the ESG risk rating tries to measure: unmanaged non-financial risk. the output, right? What does the actual report look like? So we have on the risk rating methodology 2 research frameworks, the core ESG risk rating framework and the comprehensive. The core is the current coverage level for the Romanian market for the 70 issuers that we recently initiated. And this is typically the first page, right, of a report, how it looks like. So you have the top, the score. So that's the risk rating score, the 16 that you see on top, in which risk category they fall. Then you see the distribution of in the histogram here on the left, the next section about distribution in the global universe. So the 14,000 or so companies we cover, in the industry and in the sub-industry, right? And you have an absolute and relative positioning within those 3 kind of different levels of universes, and that's very important. So you can see a bit how you are doing compared to some of your competitors in the space. You have here cloud with the distribution of the sub-industry. So the gray cloud is all the universe, and darker blue is the sub-industry. So you can see how good you do in terms of management and exposure, right? Are you more exposed than the average industry, the average of this industry, or not? And are you doing a better job than the average of your peers to manage risk exposure? And at the bottom, you have then this this kind of waterfall, if I can call it that way, graph that I presented before, but specific to yourself. And you also have then the comprehensive risk rating output. So that's still based on the same methodology, but it goes much more in depth. I would say on the core level, we have maybe around 25 indicators for a typical, let's say, sub-industry. We're here for the comprehensive, it will be more around 80. We have a deeper dive into the material ESG issues, and the output is longer. The core report is typically, I would say, 15, 20 pages. Here, typically, it's 40 to 70 pages. Voila, so that was quickly touching on what we actually did, right, in terms of the details of the project. And here wanted to speak a bit about, you know, what is also a specialty here in the team, but what we're seeing in terms of sustainable finance in the industry and the products, the sustainable products that corporates can issue, right? So on our side, the team, so we don't focus, right, on covering servicing investors. We service corporates. So it all started as some might know, by providing second-party opinions, right? Back in 2000, I think 13, 14 was the first SPO we did, and this grew substantially. Now we've launched, we've passed last month the 500 second-party opinions bar. So you can see this was quite active in the last 6 years. So we're most famous for those, and also we have additional services, so corporate license, so corporates can indeed have a deep engagement with us and then leverage the rating for different use cases. Voila, so I won't go too much in details, but so that you know more or less the approach we're having. So a risk rating license, what can a corporate do with it? Well, many use cases. I would say some of the ones, the 2 or the 3 bigger ones we see is really marketing and promotion. So a corporate really wanting to communicate more about its approach to sustainability and wanting to showcase, you know, an external and independent ESG assessment of them, and you know, a bit similar maybe to credit ratings, but of course it measures something very different. Loan cost reduction, you have access to a lower cost of capital. This is, I would say, is a recent evolution, started around 2017 with sustainability linked loans, right, where corporate can take, typically it's an RCF, revolving credit facility structure, and tie the evolution of its margin to non-financial KPIs, which can be an external rating and or technical KPIs. So that's a trend we see. evolution of the performance of its management, if you want to tie a non-financial KPI to the variable remuneration of the top executives. That's all things we see. So that's more on the specific use cases. And on the green side, it's also then you can leverage it for, have deeper insights into how you perform compared to some of your peers, or for a sustainable supply chain use cases. So back to, I think, some said that the European Commission said, and also the BVB. So let's say, of course, for now in the Romanian market, we haven't seen many green or sustainability bonds being issued, or sustainable financial products as such. So I would say here there are two main families, right? One which is not use of proceeds related, so that could also be interesting because it's then oriented to all sectors or all industries, where use of proceeds related, such as, for example, green bonds, well, you need to have the green assets on your balance sheet, or plan to finance those assets in order to be able to issue. So sustainability linked facilities, either in the format of a loan or sustainability linked bonds. It's really recent evolution in the market. The first deals are out there. It's not use of proceeds, so it's general. I would say it enables any company to showcase its commitment to improvement in sustainability, or send a strong message out there to the market, and also potentially get a reduced cost of capital, which can be the driver. But we see really that the main driver is not maybe the 3 to 5 basis points reduction that your lender could provide you with. It's more the wider approach to communication to the market, and also to internal stakeholders, right? I think to society and also to your employees. I think that's key to align with basically the values of your employees, which are more and more evolving towards this direction. So that was on the not use of proceeds related. Now on the green social sustainability bonds, these are use of proceeds related, right? So the proceeds of the bonds are earmarked to go and finance certain list of projects that you have as an issuer established within your framework. And then the good practice is indeed to have an external second party opinion to assess alignment with the principles out there. And I would say it's really to gain investor confidence. One of the outcome you can expect from issuing your inaugural green or sustainable bond, I would say in general, is diversification of your investor base, right? I won't say you will price it better. You won't price it worse. Potentially, you will price it a bit better. This is the famous greenium that people speak about. But I think the main advantage is really the message you send out, and diversification of your investor base with potentially more buy and hold investor type in your books. It's not mandatory, right? If you see the little donuts there on the pie charts on the side, it's a voluntary based market for now, right? I think with the EU Green Bond Standard, things will evolve further. But as of now, the standard is ICMA, so International Capital Market Association Green Bond Standards, and it's a voluntary base. But if you see, 86% of issuers do seek an external verifier in number of deals, and in value, let's say at 91%. So it really shows that not many issuers now go to market without an opinion. You have now also, and that could be interesting for some Romanian issuers, the transition bonds are coming to market, right? So these are also use of proceeds related, but they're not labeled green because they're not green, but they really are there to help fund transition from brownish to less brown or green. And this, I would say, is a trend because we won't get to the carbon neutrality objectives just by financing pure green sectors or green assets. I think transition bonds will play a key part in achieving this. And also now, we have the EU Commission on the line, so that's very interesting. The EU taxonomy assessment, we can provide an assessment against the latest version, so the March 2020 version of the EU taxonomy, waiting for the EU Green Bond Standards to come potentially later into 2021. Voila, so that was, let's say, a high-level introduction. We want to provide a bit more granular view of what we achieved here and provide a perspective maybe to, to a market which is less mature than others in Western Europe when it comes to sustainable finance. And now, yeah, Catalina and myself are very happy to take any questions from the audience.
Catalina, Jean-Claude, thank you very much. That was indeed very good perspective on green finance and on ESG ratings and methodology. Maybe I'll start with one question for Catalina, because she was speaking about what investors are looking after in let's say analyzing and researching companies based on ESG risks. Maybe let's say in a hypothetical situation, let's say you had an investor looking for like a broad research on the Romanian market, or for this matter on any, let's say, smaller, less liquid and a market dominated, let's say, by small to mid-cap companies. What would that investor typically look for, in your opinion? What would be the main indicators? I'm asking this because maybe the whole, for many companies, the entire process and the entire methodology might look very complicated and very broad, but what would be the critical factors investors would be asking for?
Sure. So generally, for our investor clients, especially when they are when they have asset allocation in their portfolio to companies that are located in emerging markets or on frontier markets, it's always the corporate governance dimension that they particularly pay attention to. Generally, especially when looking at these types of companies that are small to medium, there isn't typically as much disclosure through annual reports on their website in terms of corporate governance structures. So it is always that side of things that they particularly pay attention to. It's difficult to pinpoint to a particular indicator because I think especially as it comes to corporate governance, it's never going to be one specific one, but certainly corporate governance will be the main pillar of focus. And also just more broadly, I think certainly for many investors, they do think, I apologize, I have my little daughter here with me too. Certainly, corporate governance is the foundation. So for many investors, they will take a view that actually, if a company is not managing well corporate governance, their environmental and social pillars may not be set on a solid foundation.
That's interesting. Definitely, corporate governance has been a long-term topic in Romania, and we are hopeful that we reached at least a satisfactory level for most of our companies. Maybe switching a bit towards Mr. Bertolo, from an issuer perspective, let's say you are a Romanian issuer who just sees for the first time his ESG research, and maybe the rating is not the best. What is your advice for that issuer? What should you be aiming for first in terms of starting to work to improve your ESG rating?
Yeah, good question. So I would say the main comment would be potentially we're not the right entity to advise or help an issuer improve on the rating, right? We are the rater, so I think it's important to mention that it would be a conflict of interest. So we don't provide advisory. We do have benchmarking solution, right? If you want to understand what are the best practices in the industry, the top performing company in my sector, what do they do? And maybe for them, either alone or with external help, to figure out gaps, right? And how to close them. That's one option. I think for now, I would say, ask first for a copy of your report so you can read it and see how we assessed the company. If you see anything factually wrong in there, we're always happy to have a look into it. So there we can put you through our issue relations team that can be in contact with the ESG team, because on my side, from the commercial team, we are separated from the ESG analyst, right, to avoid conflicts of interest. And of course, if you believe then, an ESG rating and communicating more around it is key to your strategy as an issuer, then potentially, going for the broader comprehensive assessment, which includes a feedback loop with our analysts, right? It's a deeper dive. It's never promised the rating will improve, right? Of course, that's never promised. But I think the assessment there is much more in depth, and the issuer out of it will really get a sense of what are maybe the areas where they are lagging a bit behind, and what areas they really have good performance or disclosure or policies. So I would say, yeah, ask for a copy of your report, ask questions if you have any, and potentially, reach out if you're interested to hear more about the service we can provide.
That's great. Yeah, thank you very much. And for sure, we will stay in touch a lot more in the future, and also you will have more events planned with our issuers in the coming weeks.
Yes, certainly.
Next, we will. Thank you. Next, we will move for our next guests. We have Mr. Răzvan Dumitrescu, the local currency principal for EBRD. Răzvan, welcome, and looking forward to hear the perspective of the European Bank for Reconstruction and Development on these sustainability topics.
Good morning, Remus. Good morning, everyone. It's a great pleasure to be here next along colleagues here. Just wanted to check, is my connection poorly or you can hear me well? Can you hear me well? Okay, super. Okay, then in that case, I'll start sharing the presentation. So thank you once again. I'm Răzvan Dumitrescu, principal in capital markets development with the EBRD. As an intro, I have to share that sustainable finance and ESG is part of the DNA of the bank since its beginning. So it's part of our DNA. Now, I will first touch upon in terms of recent trends and why sustainable finance is important. I think there are two global trends emerging. One of them being increasing ESG allocation in terms of sustainable assets, ranging from billions to trillions, depending on their source. And then also in terms of passive fund allocation out of benchmark, out of indices. And to provide a flavor, I think in the US, there are around $2.8 trillion, like 50% of the equity funds market. It's basically in passive funds in that respect. And another good example closer to us is, I think, Poland's Allegro, which is the largest IPO in so far, that with a valuation of $15 to maybe $20 billion, it managed to attract around 280 up to $300 million in terms of passive investments. And of course, also the BVB here witnessed when they upgrade to secondary EM by FTSE Russells. So indexation is definitely something that's here to stay, and it's a continuous trend. Moving closer to IFIs and to EBRD, we had our first standalone task force on climate-related financial disclosure report published a few days ago, which is a milestone for us. We've also been one of the members converging to the task force, I think, since 2018. And that goes hand in hand with our ambition to become a majority green bank by 2025. What does it mean? Well, from now on, we'll have even more emphasis on policy dialogue promoting sustainable finance, but then also in terms of our investments. So we'll screen even, let's say, at a greater extent and allocate towards sustainable finance in some areas, which basically it's not only us, but I would say most of IFIs and the community, wider community globally, witnessing the same. There's another interesting point just emerging like a few days ago from ECB, the central bank. They're going to accept sustainability-linked bonds from 2021 as collateral. Why is that important? Well, this type of bonds are forward-looking bonds that basically the payment depends on the company at the firm-wide level meeting certain ESG targets. So instead of maybe looking at a green bond that has project-based, this one is actually a firm-wide part. And I would say it's encouraging to see the ECB accepting as collateral such bonds. And also coming from ECB is that Ms. Lagarde actually mentioned a few days ago that they looking into adding green factors as part of the asset purchase program. And by the way, that's significant. I think it's like up to $3 to $4 trillion in terms of their overall program out of which like 300 billion there in the corporate bond sector. So as you could see, there are major trends coming at a fast pace, and I would say that sooner rather than later, they also impact the Central Eastern European markets as well. We benefited from having colleagues from the European Commission, and I have to share that we do work closely under EC DG FISMA leadership on shaping a CMU index. And actually, I'm a keen promoter of the CMU ESG index, because that goes hand in hand with the EU Green Deal, taxonomy, and so on. So it's something that basically connects all the capital markets unions and provides a stamp of approval that the CMU initiative is live, and basically you can further develop in there. And of course, one of the key milestones is regarding BVB ESG initiative that we are here today, which basically it's similar to what we've seen in more developed markets such as in Warsaw, but also in London, which is a very good development altogether. Promoting green bond markets at the EBRD. Well, first of all, in terms of funding perspective, we did issue green bonds since 2010, more than 70 so far, all benefiting from a second party opinion. So there's lots of track record. But of course, we also do invest in green bonds and sustainable bonds in that respect. We do have a 250 million euros FI green bond framework. To provide a few examples, we invested in green cover bond in Poland, I think last year. And only recently, we invest in a MREL eligible senior preferred green bond out of Greece. So as you could see, there's a huge variety in terms of labeled bonds and what we could do. And of course, as an IFI, as EBRD, we stand ready to basically invest and also work together with the issuers in this respect. But then also we do allocate to funds, as our colleagues from Amundi, to their Planet Emerging One fund. So as you can see, we have many leverages and many ways and tools to further develop and contribute to the market. We're also part of different groups in terms of setting best practices, as ICMA, GBP, Impact Reporting Working Group, and many others. We also developing and supporting regulatory developments. Whenever is the case, we do benefit from being part of ECTEG, Technical Expert Group, now on the platform of sustainable finance, and a few other developments that are EU-wide. And one last point, which I think is particularly important here, is in terms of advisory, like technical assistance. We do have a bespoke technical cooperation framework, basically supporting issuers to tap the green bond market. But then also we are shaping sustainable capital market strategies, as in Central Asia, in Kazakhstan and Mongolia. We're also looking to incentives and how to structure products locally, but then also closer to here in terms of countries like Greece, Hungary, Lithuania, and Poland. And speaking of Lithuania, we mentioned, and throughout the discussion today, there is a huge topic in terms of how to kickstart the market, and what are the kind of the pillars. And I was just thinking that Poland, Lithuania, France, they all started with the government, with local authorities issuing sovereign green bonds. And that's, I think, one of the key ways to kickstart such market, because then you have the authorities next to you showcasing that this is for the long term, and they actually promote such a development. They can also provide through incentives, regulatory part, and so on. And of course, having a green sovereign bond provides a benchmark for the corporate sector when they come through. In terms of Lithuania, we do have a policy dialogue with support from DG Reform for European Commission, and working closely with the Ministry of Finance in setting up a green capital market strategy. But then also we are coordinating with Nasdaq Baltics in maybe looking into having a green institute out of the Baltics, as similar as you have in London, in Dublin, or other financial centers, which I think it's very useful, especially for the Baltics itself, but also for the emerging region in that respect. And looking at the investment side, we did invest in green bonds from Lietuvos Energia, now Ignitis IPO, Ignitis Group. We also invested into their follow-up IPO that only happened like a few weeks ago, and also from the private sector in the secondary public offering of Auga. It's an integrated agribusiness company. Now, I'm aware that might be a bit outdated. It's from 2019, this graph from Financial Times and JP Morgan, but I just wanted to show that when you look into JP Morgan GBIEM indices versus the ESG version of it, actually countries like Romania, Poland, Hungary, Czech Republic are performing better. They have an enhanced allocation, which shows that countries in EU, and especially like Romania, they have a chance to be part of such ESG indices when it comes to fixed income. And I also wanted to highlight that countries such as Nigeria, Pakistan, India, they're not even making into the ESG version of the JP Morgan GBIEM ESG. So these are like, I would say, interesting developments. And maybe one correlation that you could see here is also in terms of ESG allocation versus the standard indices compared to GDP per capita. So the higher the GDP, I would say, the better chance that also one could develop on the ESG side. Now, looking at Romania, we do have, of course, capital market strategy with in-house. So in terms of guiding ourselves, what we can support with our colleagues from BVB and the local authorities in terms of market developments. We touched upon governance. Of course, that's the G part of the ESG, and I think in the emerging markets and peers, that's also one of the key pillars to focus on. We do represent, whenever is the case, the region as part of the capital markets union initiatives. Of course, we also invest into debt and equity, like listed products, just to basically to showcase that we are here to stay and to put the investment where basically we say we want to promote in terms of policy dialogue. But then also we are looking now into supporting in, the local market to be including the regional technical cooperation, which I'll actually touch upon in the next slide. And of course, apart from the ESG, it's also continuous efforts to get the upgrade to MSCI emerging market status, because I do believe that that's one of the key leaders in terms of indices, and also where the passive funds are mostly tracking it. And now, I was mentioning the regional pilots. This is an ongoing technical cooperation and advisory, started with Warsaw Stock Exchange and the Macedonia Stock Exchange. Where basically we try to increase the capacity building and awareness in terms of ESG reporting and integration. It's not only about the stock exchange, but also working together with regulators, and key stakeholders that are part of the market. So basically to create the market from scratch. As also mentioned to Remus and Adrian colleagues here, we actually stand ready to coordinate, and hopefully that Romania will become part of this regional TC. And now I think it's just a matter of getting the consultant on board and kickstarting the project. So this is another area that I think it's very timely with all the developments here. I'm aware we're kind of short of time, so I'll focus a bit on the ongoing opportunities and challenges. Well, we all mentioned in terms of taxonomies. I was listening to an event, I think yesterday or 2 days ago. There are almost 200 taxonomies globally. We need to converge to universally accepted standards. And one way to do so, and I do hope, that's to be the EU taxonomy and the developments that happen in EU. And another key development in this respect could be the European Commission-led open source ESG repository data, which is very valuable. We are mentioning about ESG scorings and research, but I think we also have to think that the data in there is the scoring is as reliable as the underlying data it's available. So while throughout the project, it's very useful that firms, issuers also actually improve the transparency, the governance side, and ensure that the data is available in a comparable and in uniform way. And this is something that regulatory bodies, IFIs like EBRD, and also like Pillar 2 pension funds, we have a duty to basically a key role to play and ensure that such standards are put into application and, of course, safeguarded. And having said that, I would like to stress one development from last year from Poland, where they launched an ESG index that serves as a benchmark for NN investment partners, which is a pension fund in Poland that also have in Romania. I think they're the leading fund here, and they actually established an ESG index fund. So as you could see, there are best practices that can be adapted from one market to another in that respect. And why not actually having a free Seas initiative ESG index, because you have already an index there where you can just add the ESG screening. So basically promoting the regional approach in here. So that's basically a quick win, depending on how the ESG criteria can be structured. And one last slide, and I think our colleagues from Sustainalytics and also European Commission mentioned in terms of green bond prospectuses as part of the Sustainable Finance Action Plan. But then also IOSCO report in terms of highlighting the need of regulators to step up and basically support the sustainable finance market in emerging markets. And I would stress again, especially on the corporate governance side. These are other few developments here. As you can see, the UK government might expect all listed companies and also asset managers to disclose in line of TCFD by 2022. And another UN-backed initiative on task force on net-related financial disclosure is going to emerge soon in terms of reporting and relating to biodiversity. So there are lots of, I would say, a wide variety of initiatives which are very useful, but then we do need to converge and also to understand that sustainable finance, or when you're issuing a green bond or other instruments, is not like for reputation or something for short term. It's something that we should embrace for the long term. And sometimes we should think more away from maybe the pricing itself, but then from the long-term gain that we have out of such product. And having said that, it's been a pleasure, and thank you for your attention. Mulțumesc mult.
Yeah, thank you very much, Răzvan. I guess it's really exciting to see all the projects going on and all the approaches taken by different markets and different countries. Maybe for just one quick question on the region, because we see that, let's say, many of our peers in broader CE region have taken different routes, different approaches, and maybe there is a slight sentiment that we are, let's say, maybe slightly behind. Hopefully, we can catch up. What is your view maybe on the, let's say, the next step? What would be your recommendation or your advice for the Romanian, let's say, capital markets?
Well, so thank you. It's actually a very, very good and timely question. So as I was mentioning throughout the presentation, I think it's important to have a partnership in between the private and public stakeholders, like local authorities. And in terms of developing the sustainable finance market, you also need to have the government, maybe like issuing green bonds. And by the way, they would benefit, I think, the most given the rating they have in terms of green bonds versus the non-labeled ones. So you do need to have also like kind of basically aligning in terms of interest in a position coming from both parts, because in many ways the government can kickstart a market or take it away, and that's what we've seen, as I was mentioning, in Poland, in Lithuania, and France, and many other more developed markets. You see first the government having some issuances or like tapping the market, or even having a sustainable capital market strategy. So this, I would say, it's one of the key pillars, and what you do here is, as part of the BVB, I think it's very encouraging. It's the right step in the right direction. And maybe just to add one extra point, there is an ongoing project, I think, undertaken by yourself together with ASF and the Ministry of Finance in terms of shaping a capital market strategy. That's a way where you can actually put and be part of like having a sustainable capital markets strategy as a subchapter, because then you already have all the key stakeholders in there. So yeah, why not adding it in there and use that opportunity in that respect. Thank you.
We are definitely looking into it, and also we do hope to have good news and to become a part of your project you initiated together with Poland and North Macedonia. So thank you very much for your time, and we are running slightly behind schedule. Thank you. So we'll continue with Mr. Mugru Popescu, Investment Director at BCR Pensions. Maybe just a short intro. When I had just joined earlier in the year, Bucharest Stock Exchange, one of the first email we have received was from BCR Pensions asking us about our ESG disclosure. So yeah, it was a bit of a surprise, but also a good news, since we already had had in our plans to start ESG, and it was very positive to see that some of the largest local investors are actually looking at it and actually working into bringing ESG standards or ESG criteria into their investment decisions. So we are very, very excited to hear about the ways you use ESG in your investment strategy.
Yes, thank you, Remus, and thank you, everybody. It was an honor to hear from such experts in the field. So in the next 10 minutes, I will talk about our ESG integration in practice from an institutional perspective, from institutional investor perspective. And I will briefly touch 3 subjects as we discover them along this process. What ESG integration is not, a bit about current and regulatory framework in Romania and our experience in implementing it, and also a few elements from a study made by CFA Institute at a global level on guidance and case studies for ESG integration. So let me start by saying what ESG integration is not, and many people believe it's exactly that is. So ESG integration does not mean that investment in certain sectors, countries, or companies is prohibited. This would be an easy implementation. Secondly, investment portfolio in investment with ESG integration, portfolio returns are not sacrificed by using ESG integration techniques. Also, by implementing immaterial ESG factors, traditional financial factors are ignored. Not at all. And also that major changes to the investment process are necessary. In our case, we've seen that is not a major shift, at least for the time being. So in Romania, in year 2019, we've seen some reference in our pension fund regulation requiring to implement in procedures how to evaluate proposals related to corporate governance and capital structure, social impact, and environment impact. So it was a very general statement, but we have taken it very seriously, and we started to look into the process. So that's why we are a bit, I would say, from my estimates, we are one of the pioneers in this field. So I will share with you some of the practical experience which we have in Romania. So we started looking for ESG ratings for the main issuers at the stock exchange. At the local stock exchange, there was none except of OMV Petrom, which had a very brief ratings for a number of factors, and I will praise OMV Petrom, which is basically it's the forefront. And also they received yesterday for an award for their sustainability report. Evaluated. I was part of a jury, so the best sustainability report in Romania. So things are related. So after noticing that there's no ratings, we started doing our own research from the sustainability reports. I appointed an analyst in my team to look into the sustainability reports and find the indicators. It was a huge undertaking, and we don't want to repeat it. We identified some indicators. We put some reports together. We have engaged in a dialogue with some issuers, and it was very interesting. I think discussing with issuers, you can basically do the rating, because you can get answers like what is this, or you can get what you need to improve, what do we need to do to improve. So this was the kind of discussions that we have, and I would think that now we are a bit more ahead, and we have issuers that are very good at this. And I will again refer to the prizes received yesterday for sustainability reports, which the top 3 were Petrom, Electrica, and Alro. And it's good to praise the one that are good, and also I think it's a good step to point the one that are not doing good. So that I was we cannot do it from directly from the investor level, but I think it should make a difference. So to cut the story short, we have continued by doing our own ratings, of course, which were very basic, not at all close to what Sustainalytics and other experts in the field are doing. And we rated all the local companies from bad. We had 3 ratings, if I recall, and integrated these ratings in our evaluations. So for European companies, we had all the reports, complete reports, so there was no issue. Compared to the local issuers, were basically, far ahead. So I think it was a very useful exercise. It gives us not only a quantitative view on the situation, but also on the management capabilities, on the quality. So you find a lot of things, and also by participating in a jury in the competition for the best sustainability report, organized by Investor Relations Association. I noticed that some companies are getting very good at this area. So I'm very optimistic about the development over the last 1 year or so. So that is it on the local market. Furthermore, I will briefly refer to the global CFA study on ESG integration from the perspective of portfolio manager and analyst. It was a survey surveying about more than 1,000 financial professionals, more than 23 workshops in 17 major markets, case studies, and so on, and trying to find out how are the global investors integrating the ESG factors. And I will mention to you a few findings. There is no one best way to do ESG integration, no silver bullet. Governance is the ESG factor most investors are integrated in their process. I think we can see the same in the local market. Hopefully, we'll continue to require the highest standards. Environmental and social factors are gaining acceptance, but from a low base. ESG integration is farther along in the equity world than in fixed income. I think there is no progress on the fixed income in the local market, but also in some other places. And also, portfolio managers and analysts are more frequently integrating ESG into the investment process in a way, but rarely adjusting the models, the financial models. I also can confirm this. I would like to see in the research reports in ESG section and potentially a rating from now on. So this global framework, it's a very comprehensive one. I will strongly recommend for the ones that want to implement a comprehensive framework. But it starts with what we actually did: company questionnaires by research, company questionnaires, red flags, watch lists, and so on, and then goes to more active ownership, like voting and discussions. I also stress that this is a process, is not something that it's a black and white. So we don't exclude companies, but we definitely will consider their performance in this area. So we see this as a way of a first step in discussing and improving issues together. Then we move to evaluation. There are different studies. How much is the impact on evaluation of this ESG performance, let's say, which is still under discussion, but the impact it's on the positive side, evaluated at, if I recall correctly, 5-10% in terms of if we can give a number to the ESG performance as of today. This is very, ballpark number. Then on portfolio level, this is the most advanced approach, which we are not there yet, but it needs a lot of resources, and I think we have to go through the first steps. It's to have ESG exposures, limits, and scenarios, and this is the next step, or even moving to the allocation, strategic, tactical allocation to ESG scenarios and so on. So this is the portfolio management approach. So I will end up by summarizing my presentation with confirming that we take ESG factors in consideration. We do not comment on individual companies and so on, but we are engaged in dialogue, individual dialogue. We integrated it both in terms of research, but also in terms of evaluation. And we are open to this process. We are happy to discuss with issuers anytime to what is okay, what is not okay, and definitely you can see this reflected in the management performance of the companies on the long term. So from my empirical experience, it's a direct relation between management performance and ESG performance. So I don't know if the experts from sustainability have approved, but how can you evaluate the management performance? But I would see like the financials are the quantitative factors. The ESG is the qualitative factors of the produced by the managers. So I will end up with this, as we are a bit ahead of time, behind the time schedule. So Remus, back to you.
Thank you very much, Mugor, and we are definitely very happy to see that local investors as well are encouraging and pushing this trend, and it's not only coming from the foreign players. Maybe I won't let you go without also a short question. Maybe I will just rephrase my favorite question of the day. Since you have been researching and talking to many local issuers, maybe do you see, like, I don't know, a template or a typical, let's say, mistake or a typical miss in what the local issuers are doing? And maybe if you can just give like a general advice for the local issuers in regards with ESG.
Yeah, thank you, Remus. Yeah, it's there are some, as I mentioned, there are a number of issuers, and I mentioned a few that are doing very well at sustainability reporting and policies. And it was very hard to differentiate among them and about the top league. And what made the difference? So I would address to the top league, because the lower league, I would definitely they will be out of the scope for many investors if they don't do at least the ratings properly. But for the top league, I think the difference was made by the companies that typically set up targets, real targets for improvements in factors, and they follow them for a long term, and they register progress. Of course, you can have some general targets, but having real targets, and in the management, it's a very strong incentive to do things right. So that was my brief general comment, and I would strongly congratulate Stock Exchange for making and their partners for making this progress. As we are really waiting for this project for some time, and I was engaged with discussion with Adrian, the CEO of the Stock Exchange, with the CFA level, the association level, and I'm happy to see that he has done a great job in moving forward this project.
Great. Thank you very much again. Yeah, and we are very excited maybe to have you in a year's time in a similar event, and maybe you could report on the substantial progress of the Romanian issuers.
Yeah, I hope so.
Thank you. Our next speaker is Mr. Timotei Joron. He's the head of ESG development and advocacy at Amundi Asset Management. And maybe just a little bit of feedback, a bit of background. Amundi Asset Management is one of the, let's say, strongest promoters of green bond funds and green bond investments globally, and they have started some very innovative, let's say, projects in the green bond space. So yeah, we briefly touched in some of the previous presentations about green bonds, but we are looking forward to learning more about this type of securities. Thank you very much, Mr. Jolan, and the microphone is yours.
Hello, Danila. Nice to meet you all. First, can you hear me well? And second, can you see my screen?
Yes, both questions.
Okay, that's a good news, and I'm really sorry not to be able to meet you in person, but you know the circumstances. So my name is Timotei Jolan. I'm heading the ESG development and advocacy within Amundi, and I'd like today to share some insight with you on the particular topic of green bonds, which is one of the many areas we are active in at Amundi. And perhaps the angle I would like to offer today to you is to try to answer two questions very simply. Number one is, do green bonds matter for Romanian investors? And if so, why? Number two is, do green bonds matter for Romanian markets and regional markets you can be active in? And we try to give some insights on the reason why it does matter and the solution that can be developed to actually have a more active and vivid market in Romania and nearby countries. So just to tackle the first questions, I like to remind everyone a couple of basic facts on the green bond market to understand why it has been such a big success among investors. And that is true for both institutional investors globally, as well as on the wealth management side to complement institutional investor appetite. And part of the answer lies in the definition of the green bonds. What is a green bond? It's a regular bond aiming at funding projects with positive environmental and or climate benefits. So from an investor standpoint, sorry, Daniela, can you still hear me?
Yes, we can.
Okay, sorry. So from an investor standpoint, from the financial analysis angle, it's a bond. That means that it's cost effective. It's an easy fit within one asset allocation. And you can understand well the risk that you're taking, because at the end of the day, these are the same risk as for a regular bond, but it provides a higher level of transparency with respect to the use of the fundings. And that's really the number one reason why it's been a success both on the supply side, but first and foremost on the demand side. And last year we saw more than 250 billion of US dollar of issuance for a market which has been created in 2009. So a very, very, very recent market. And in terms of transparency for the investors, it relies on 4 pillars, which have been defined by market participants through ICMA green bond principles. Number one, use of proceeds raised to finance green project. Number two, transparency with respect to process and project evaluation and selection. Number three, transparency with respect to the use of proceeds. So I raise money, how do I use it before the allocation towards financing green projects and throughout the life of the green projects? And number four, reporting, which is critical for investors that want to have information on the projects being financed and on the impact of the projects that are being financed. So if we look back at market growth, as I said, it was created in 2009, and over the past 5 to 6 years, we have seen tremendous growth in terms of absolute volume of issuance. And here you can see the volumes of market size, so that's the market outstanding and issues per year. Mechanically, volume outstanding grows as volumes issued per year growth. But we have seen also interesting trends in terms of geographical diversification. It started in Europe really and expanded progressively to other countries, other regions. So in the US, in North America, as well as in Asia progressively with the leadership of China. And we have seen also increased diversification from the sector. So it started as a segment dominated by supranationals like EBRD, EIB, and the likes, and progressively it expanded towards corporates and then towards sovereigns as well as corporates. So that's the overall picture. You can understand why there is demand from responsible investors, because in their fixed income allocation, it's very easy to add green bond allocation within a corporate bond portfolio, within a sovereign bond portfolio, which are usually very significant part of one's investors' allocation. But once you have said that, you need to realize that there are some gaps. And here I'm coming about the specificities of a country like Romania. And it's also true for many other countries which do not appear in the list I alluded to on the slide number 5, where you see the countries where really green bonds issuances splurged. The development gaps are threefold. Number one is a geographical frontier. It remains a market which is dominated by developed market issuers. This is due to the fact that this market have more depth and they're perhaps slightly more mobilized on topics such as energy and ecological transition. Not always true, but very often true. There's an issuer frontier. We need to see more issuances coming from a broader set of sectors. And there is an instrument frontier. We have seen issuances coming from senior unsecured debt from investment grade issuers. We haven't seen much issuances coming from securitization, private debt, and other parts of the credit market. Geographical frontier, I've just mentioned it. So here, what is missing? Emerging market. It's really, really clear from this snapshot. And you need to realize what emerging market green bonds would bring to investors. It's the ability to combine additionality, transparency, so an impact story, with higher carry return, higher yield coming from emerging market credit spreads. Issuer frontier, I've just mentioned it, but we want to see more issuances coming from sub-sovereigns as well as private sector, which are not issuing today, waste and water management, industrials, transportation, and the instruments frontier as well. So just to pause here to answer to the first question. So emerging market green bonds would provide something to investors in the sense that they would enable these investors to not only have transparency and impact, but to have transparency, impact, as well as returns. And this is very important in a low yield environment. And this is the reason why there is a global interest to see more green bond issuances coming from countries such as Romania. So what asset managers and investors can do to foster the growth of these markets? Here I've put the example of a partnership that we initiated with the IFC, which is part of the World Bank Group focusing on private sector development, with the support of EBRD, EIB, Proparco, and other investors. And the idea was really to, first of all, make the assessment that there was a development gap in terms of green bond market development in emerging countries, and that one way to answer that investment gap was to work at two levels. Number one, on the demand side, to create a fund to show that there is demand. Number two, on the issuance side, to make sure that there would be technical assistance available to help companies on the ground to issue a green bond. And with the assessment that there was potentially great demand for such product, to combine yield with impact. So on the investment side, we have designed with IFC the largest emerging market green bond funds in the world, with public entities taking a junior position in this market, so enabling investors to get senior exposure to emerging markets at large. And we've been working with the IFC on fostering supply on the ground, training emerging market bankers, and providing technical assistance facility whenever possible. Then we replicated that approach with the European Investment Bank on European Union securitization as well as private market to enable to engage small and mid-cap companies and potentially finance smaller loans and direct projects through green securitization, with as well a focus on demand and supply. And perhaps I will conclude here to let Daniela ask a questions if he has some, to reflect on three things. Number one, developing a green bond market in Romania makes sense to answer global investor demand to combine yield with impact. Number two, for Romanian investors, as for other global investors, getting access to a broad, diverse, and deep green bond market makes sense because you can integrate this exposure in your overall fixed income allocation. Number three, to really build an impactful carry return portfolio, like an EM green bond fund or a private debt green bond fund, one need to create and support the development of this market. And to do so, you need to work at two levels. On the demand side, by structuring relevant funds, and on the supply side, by providing technical assistance and engaging issuers directly on the ground. And I will stop here, Daniela.
Thank you very much, Timote. Yeah, I think my first question is basically a request for you to share the presentation with us after the event, because I think we have a lot of learning to do from your material. And maybe just to continue, the most basic question, I guess, a prospective issuer in Romania would have a base about green bonds is about yield. And we heard in the presentation of a previous speaker the term greenium. So what is the situation with the yields? How do you, let's say, compare a green bond with a plain vanilla bond from the same issuer? And where do you see the trends going in this topic?
I mean, this is a topic we monitor very, very closely on all our portfolio. We have roughly 17 billion euros of green bonds under management in emerging market portfolio, in euro fixed income portfolios, and in global portfolios. The situation today is that we can see very, very tiny premium for green bond issuances at issuance, and this is due to technical reasons, as there is a very high demand for these bonds versus supply available. But then during the life of the bonds, we don't see greeniums. And the reason is that at the end of the day, in terms of credit risk, investing in a green bonds is exactly equivalent to investing into a regular bonds from the same issuer. And that means that if an issuer defaults, it will default on its green bonds as well as its regular bonds. So at the end of the day, the pricing for that bond should be equivalent, and that's what we see on the markets. But then perhaps one, if you allow me, one comment, why do we think it makes sense for issuer to put together a green bond program if it doesn't have a huge impact, at least in the short run, on their funding cost? Number one is, and this is very important for emerging market issuers, access to a broader set of investor base. And that's really critical when you face highly volatile market environments, notably. Number two is it's a great tool to embark on an ESG journey and improve your corporate social responsibility practices, be part of RI indices, and in the long run, thanks to these actions, lower your cost of capital.
Makes total sense, and yeah, definitely we are a green bond market. And yes, maybe looking forward to stay in touch for the future and maybe to give you some opportunities in Romania as well.
So we're looking forward to that, and we have local people on the ground and teams very active in all these markets. So I'm looking forward to being in touch soon, I hope, with all of you. Bye bye. Have a nice day. Thank you very much.
Thank you very much. Bye bye. Finally, one more speaker for today. Maybe just for a little bit of background. 2 weeks ago, we had a conference call with the team from Climate Disclosure Standards Board, and we definitely like the call that much that we decided to invite them today. So our next speaker is Ms. Nontocozo Kumalo, Corporate Engagement Manager at Climate Disclosure Standards Board.
Thank you very much, Hermes, for the introduction. I'm not sure if everyone can hear me because somehow, can you hear me?
Yes, we can. Yeah.
Okay, I just had a bit of a break in the connection there. So my name is Nontocozo Kumalo, as basically Hermes has highlighted that I'm from the Climate Disclosure Standards Board, and I'm the Corporate Engagement Manager there. My presentation really is going to be taking you through who we are as the Climate Disclosure Standards Board, how are we supporting companies in the EU with regards to mainstreaming climate and environmental information, and really making the case for companies actually improving that and what we can actually do with the Romanian companies towards enhancing the disclosures so that investors can be able to access decision useful information to assist in their when they analyze reports and make investment decisions. So I'm just going to share my screen, if you'd allow me, just a second. Okay. So you should be able to see my first cover slide right now. Okay. So basically, who CDSB is, we are a consortium of 9 environmental and business NGOs. We were set up in 2007 at the World Economic Forum in Davos. So this was after this group of individuals had observed the existence of a gap with regards to integrating climate and environmental issues into annual reporting. It's notable that we are actually chaired by the World Economic Forum, and was supported by a technical working group of over 40 experts. And our mission is actually summarized here, which is really to create enabling conditions for the integration of decision useful climate and environmental information into mainstream reporting. And then in terms of how we actually achieve our mission, we achieve our mission at CDSB by providing companies with a framework for integrating this information into mainstream reporting. The CDSB framework includes 7 guiding principles, which really set out how you report, and then the 12 reporting requirements that you can see here on the screen really help companies establish what to report. The principles are actually aligned with the Task Force on Climate-Related Financial Disclosure recommendations. In terms of how the CDSB framework is used across the world. Several, basically many large listed companies are using it. And it's also referenced in the EU Commission guidelines on non-financial reporting, as well as in the UK Companies Act. And seeing today we are talking to the Bucharest Stock Exchange, we also find that the framework is actually referenced by 14 stock exchange guidance globally. So we can say that there are a few such as Tokyo, Singapore, and London who reference this framework. And then basically to summarize in terms of the need to actually provide climate-related information, I don't even go as far as saying environmental information. The TCFD recommendations report provides really a nice quote that you can see here, which is really about how inadequate information leads to mispricing of assets and ultimately financial instability. And another key issue for companies to really be aware of is that environmental risks are business risks. This is actually now widely understood to be true. And companies need to really be starting to understand what are the financial risks that are actually arising from environmental issues, and also what are the opportunities, and also understanding the detail with regards to those risks. So what are the transition risks with regards to which affect their business, as well as the physical risks and how that could impact, for example, the supply chains of the organization, as well as opportunities. And just here, I mean, we thought it's really good to really, again, remind ourselves of the Task Force on Climate-Related Financial Disclosures, how it was formed. Key to that is that it was industry-led. So a lot of what is recommended with regards to companies actually linking climate-related issues to the financial issues and including that information into their annual reports comes from a group of experts that actually emerged were from the industry. So the Task Force on Climate-Related Financial Disclosures released their final report comprising 4 elements, which a lot of us would be aware of: governance, strategy, risk management, as well as matrix and targets, and there are 11 recommendations across these 4 areas. And what we often highlight to companies is that these elements actually are meant to interlink between each other. So the disclosures shouldn't occur in annual reports in isolation. And then the key thing to also note is that despite the introduction of the TCFD recommendations in 2017, there's still a lack of sufficient climate-related financial disclosure amongst companies. And this really is part of what's driving our work at the Climate Disclosure Standards Board. So the linkages between that information and the financial impacts is still lacking. And this is echoed also by the Commission in terms of some of their documentation, where they've highlighted that non-financial reporting, non-financial information is still not sufficiently comparable or reliable. And again, these companies still have a long way to go in the EU with regards to really articulating the issues around non-financial information, and also particularly climate and environmental information, which is what the Climate Disclosure Standards Board really helps companies to do. And our own work at CDSB actually really highlights some of these issues, in that we conducted a review looking at 2019 climate and environmental disclosures under the EU Non-Financial Directive, and then also looking at alignment with TCFD. We're looking at, we looked at the 50 largest companies by market cap, accounting for 4.3 trillion in US dollars. So we were thinking that this actually accounts for a sizable chunk of the EU economy, and it would be a good indicator to see how a company is actually doing in the EU. If these largest companies are actually falling behind, then it's a good indication that there's progress to go with regards to how these issues are framed alongside financial information, which is essentially what I'm sure Amundi and other investors would agree, that the information linking it to financial information really helps with the decisions. And then in terms of the overall picture that we found when we actually looked at this report, the picture is that basically it's highlighted here on the slides that the company is actually falling short of providing that decision useful information, the quality information that is comparable to allow investors to really integrate climate-related information into their decisions. So there's still a need for more depth, for example, with regards to the information that's provided. So CDSB then continuously we're recognizing these challenges with regards to providing decision useful climate related disclosures. So under a project that's funded by the EU LIFE program, we're providing free support to companies in the EU. So companies in the EU can access the full CDSB team, which again, obviously has access to the over 40 technical working group experts that we have highlighted earlier. So companies then access disclosure feedback. So we look at how are they reporting on these issues, how are they integrating the information alongside financial information, and we also provide them feedback with regards to how can then they improve, and looking specifically at TCFD and as well as climate and environmental issues under the non-financial reporting directive. And then other things we do relate to policy briefings, because we do have a strong policy team. So if companies need to stay up to date with regards to developments, we're able to also support that. And one of the things that I enjoy as well, my other colleagues, is the workshops that we do with companies in the EU. So companies then get to see what others are doing. We go through case studies and we really go in depth in terms of these issues. And then resources, so companies are able to, through talking to us regularly, access resources with regards to disclosing on climate and environmental issues. I'll touch on some of these in the next slide. And then this is just a snapshot of what some of the feedback would look like, and just a reminder of our funding with regards to the EU LIFE program. So to end off, whilst this is just not all the resources that we have, it kind of highlights the two key resources that I think would be very useful for the Romanian companies to look at if they're thinking about aligning with TCFD, for example, as well as also starting to understand the linkages between this kind of information with financial information, and how to really integrate it and talk about it in your annual reporting. So there's the TCFD implementation guide, which contains some mock examples for companies who are just seeking to align with TCFD. And really, even if you're not trying to align with TCFD, but if you're really just trying to develop some way of speaking about this kind of information in your annual reporting, these are actually good resources to use. And the Good Practice Handbook, which highlights good practice case studies that you can look at from across the world in terms of how companies are actually implementing TCFD. And the TCFD Knowledge Hub we manage on behalf of the TCFD. There you really find great courses freely available, as well as resources that we gather along the way with regards to how to implement TCFD. And we find that this has been actually very helpful. We get really good feedback from companies for both the courses as well as the resources. And we encourage companies to engage this material. And something else I'd also like to highlight is that Romanian companies can actually look forward to some of these resources being available in Romanian. So we really hope to see that in the near future. And to just end off, please feel free to contact us. I'm the main contact with regards to the companies, but again, through me, you get to access the rest of the team. So I don't necessarily work alone with the companies. So it just feel free to just send me an email, or if you feel more comfortable speaking to Ramus is also something that you can do. And we're just here to support you as well as the Bucharest Stock Exchange. Thank you.
Thanks, Nontokozo. Very, very interesting. And I think, yes, you are a great resource available and willing to help the Romanian capital markets and the Romanian issuers. And we hope to be in touch a lot in the next, let's say, months or maybe years. Maybe again, as another typical question for us, because we also saw on the map you provided with the companies you have been reviewing, it's a lot of developed Europe. Still, we see ourselves, the big difference. I mean, basically, we are just much smaller in terms of size of the listed company, size of the market, liquidity, and most relevant metrics. How do you have like a specific approach, or do you see like specific needs for the smaller companies or for the companies from emerging Europe or emerging markets in general for let's say becoming as compliant or to report as well as possible the required information?
So we're actually working very hard now within, I'd say, a lot of some of the countries that are developing in this space. So we definitely see that is actually where there's room for potentially really pushing, the market and doing very well. So we're very much focused on that. So despite us looking in terms of the review at those more developed countries with regards to reporting, our focus is really on assisting the ones that are still moving forward. And we're seeing quite a lot of potential, and we're speaking to companies, for example, in Romania and Poland as well, and they're really starting to engage us. So I'd say definitely we see some great things. We expect some great things. And as I mentioned, also the translation into Romanian, so perhaps into Polish at some stage as well. So, yeah.
It's great to hear. So, thank you again for your participation, and we will definitely stay in touch. Yes. So this brings an end to our event today. We do hope that you found some information useful and interesting. And I guess what we can promise is that you will hear more from Bucharest Stock Exchange and about ESG and sustainability topics in the future. Thank you very much and have a nice day.